Welcome, my name is Caroline Mogure. The Central Bank of Kenya has spared Kenyans from expensive loans following the retention of its benchmark lending at 13%, citing positive progress in the cost of living and exchange rate in the Kenyan market. The committee further noted that overall inflation is expected to continue declining in the new term, supported by lower food and fuel prices and pass-through effects of the recent exchange rate appreciation, as Elizabeth Kisiangane reports.
Borrowers have been spared the higher cost of loans after the Central Bank of Kenya retained its benchmark signal rate at 13% following Wednesday's Monetary Policy Committee meeting. CBK said the current monetary policy stand has reduced the threat of money-driven inflation even as banks cut loans to customers and bad loans reach record levels, pointing to a worsening debt crisis afflicting Kenya borrowers. In a slight relief for Kenyans, food inflation declined to 5.8 in March from 6.9 in February, reflecting lower prices of some food items, particularly maize and wheat products, carrots, kales or sukuma wiki, spinach and cabbages, following improved supply attributed to ongoing harvests and favorable weather conditions.
For vegetables, it has been declined from 2.5 to 2.4, and for non-vegetables has had a significant decline from 4.3 to 3.4.
On the other hand, fuel inflation declined to 12.3% in March from 13.4% in February, largely reflecting the impact of the shilling's appreciation, which resulted in a decrease in electricity prices and a downward adjustment in pump prices.
We have reduced the shilling-denominated dollar debt by at least $1 trillion shillings. If you consider our external debt is about $38 billion.
CBK quoted the shillings at 131.4892 per unit against the US dollar, where the shilling has sustained its rally against the US dollar, raising optimism among traders and consumers for a lower cost of living. The strengthening of the local currency also sets up the country for a lower cost of electricity and relief from the debt servicing distress. Overall inflation of the cost of living measure declined to 5.7% in March from 6.3% in February, driven by lower food and non-food and non-fuel inflation, which it will be a huge relief for cash-strapped Kenyans. Therefore, overall inflation is expected to moderate further in the near term, supported by the easing food and energy prices through effects of the recent exchange rate appreciation and the impact of monetary policy actions which continue to filter through the economy. Reporting for Tandao News Outlook, I'm Elizabeth Kisiangani.